Hi, my name is Armand, and in this video I will show you my market wrap-up and analysis on the current markets, specifically in crypto and global markets overall. As it stands, currently, the crypto market mimics the movements of the share market due to its correlation. Until such time that Bitcoin crypto movements become uncorrelated, then we would be able to make some independent analysis on crypto as a whole. There are many things that are happening at the moment which is affecting all markets, including crypto markets. Events such as high inflation, increase in food costs, high gas prices, increased rents, massive protests in several countries, high unemployment, and economic uncertainties. I use both fundamental and technical analysis when assessing the crypto markets. On the fundamental side, I look at the macro to get an overview of what's happening around the world and on a macro scale. One of the main areas to look at in making my analysis is the 10-year treasuries, or 10-year yield, as you can see here. The share market is a derivative of the 10-year yield, so the 10-year yield is the mother of all debt markets. The 10-year yield here on this chart shows an increase of 8.4 basis points in one day. In the last 3 days, it had an increase of 36 basis points from the low of 2.74 to as high as 3.1%. Interestingly, if you go back to the first week of March this year, you can see that the 10-year yield had a low of around 1.67 to more than double the amount, which is up to 3.49% on the 6th of June. Ideally, what we want to see is a gradual movement of the 10-year treasuries either way, because if the 10-year yield starts to move erratically up, for example 25 basis points in one day followed by another 25 points the next day followed by a rapid succession of one after another, it would imply an imminent implosion in the debt markets, and stock markets will eventually correct, and this will happen very quickly. If or when that happens, stock markets will go to extreme selling pressure and most markets will be affected. Funds will eventually flow to commodities and expect cryptos to get a massive boost. On the crypto side, Bitcoin is still hovering, as you can see here in this chart, is still hovering around the 21,400 area. It had been hovering around the $19,000 mark in the last 3 weeks until it's recently broken the $20,000 resistance, turning it into support. There's now a current resistance around the $28,000 which Bitcoin needs to break through so the cryptocurrency markets can get some relief from this crypto winter. We are not out of the woods yet due to the global and economic uncertainty, which is still affecting all markets, including the crypto markets. At this stage, Bitcoin is undergoing some consolidation as the bears and the bulls are fighting very close. It'd be interesting to see what happens, as we may get some direction in the next week or so. Looking at Ethereum now on this chart, which is the second biggest cryptocurrency market cap, it is currently priced at around $1,215, as you can see here. And it's acting as the resistance line, and it needs to break through that resistance, turn it into support. This is a big decline from its high of around 4,800 last November. If it does break through, the next resistance area is around the $1,800 mark, as you can see here on this line. However, from a technical standpoint, Ethereum appears to show some type of a bearish flag pattern, and we may get another leg down and experience a bit more pain before it gets better. This also depends on Bitcoin, because Ethereum along with other altcoins follow Bitcoin's path. That'll be all for now. Before you go, you may want to check out BitForex, as they have a great platform. The user experience is great and it is very user friendly. They also have an NFT platform, as you can see here, where you can buy and sell NFTs if you are into NFTs. They also have a finance section where you can earn some decent yields for lending your crypto or borrow against your Bitcoin or Ethereum as collateral. I hope you enjoyed this video, and for more videos like this, please subscribe, share, and like this video to keep you updated on our upcoming videos. Thank you for watching.